Hey, what's going on, guys? Mike, aka Crypto Jewels. I'm going to get into Bitcoin this evening. I'm going to probably get into the weeds quite a bit. I'm going to step out and also look at the macro picture. I'm going to get into some, Elliott Wave technical analysis, and then maybe some not so Elliott Wave related TA, just kind of some observations. But guys, I'm not a financial advisor. I do this for entertainment and educational purposes, so do not blindly follow anything I say or do. Also, guys, if you guys like the content, hit the like button, hit notifications to be notified of new videos, and subscribe to the channel. That helps with the algorithms of YouTube to push it to people like you guys. If you guys like the content, that helps me quite a bit. So all right, into the Bitcoin analysis here. As you guys all know, we have been impulsively moving upwards, since this low here in November, since the November low. As I've got here notated on the chart, this is a larger degree, 3-day time frame of not the entire Bitcoin history, because it goes all the way back down there, but at least the last two cycles, which is the 2013 top, the 2017 top, and the most recent top in 2022. And the reason why I'm pointing this out is because it's not unlikely for us to be consolidating and acting the way that we've been acting in this type of scenario. So as we can see over here in the 2013 bubble that popped, in this long correction bear market here, once we broke through this resistance and retested it and then died off, that was the capitulation event, which caused the bottom. And then we consolidated here, before we decided to try to run up and break through this resistance. This one did not break through it the first try. It wicked way above it. This was an extreme mini parabolic run that wicked up above it, got rejected down below it, consolidated down below it for a little while before it finally got enough steam to go ahead and break through that. And once it broke through that, then the rest is history, and it shot up pretty darn quick, pretty darn fast. As we can see here in this scenario, same type of situation. This resistance, or this zone played resistance. Played as support much longer than this one did down here. I mean, if we extend this way, I guess you could say this thing wicked into it, 1, 2, 3 times. But that's, fairly dramatic. Those wicks are compared to here. This go around, we tested this zone, which became support, tested it again, became support, retested it again, a little bit deeper this time, became support, and then we kind of just, hovered around this small little range for what felt like forever. I remember that time. And then all of a sudden, capitulation happened, bottom fell out, dropped down, consolidated down here a little bit, before we really started our impulsive wave and our impulsive structure up. And then we come up to this resistance area, and like we did here, or not like we did here, we consolidated underneath it first instead of having this mini parabolic run, for a couple weeks before we got enough steam to then just bust straight through it. And then go up, and I guess you could call this our parabolic extreme, and then we retested back below it, which you could call it the Rona dump. You can call it whatever you want. That's irrelevant. And then all of a sudden, you flew from there. So in the same token, you've got kind of a similar scenario brewing here, where you've used this as support really now once, twice, 3 times, and then you consolidated inside of it before you capitulated down, getting this rounded consolidation structure. And then very similar to here, we are becoming impulsive, and we are ranging and consolidating underneath this resistance. Now, whether or not, we get the same result or not is yet to be seen. Maybe this time it decides to break down, come back down, and, then consolidate and bust up from there. But there's a fractal, I guess, if you want to call it that I kind of like the looks of, and it matches my overall idea from an Elliott wave structure of where we are in the cycle, which would be a larger impulsive structure. 1, 2, 3, 4, 5, putting on our fifth wave and our fifth wave, and then we'll have a uber bearish market from there on out. Not from there on out for eternity, but for the next 3 to 4 years, whatever it takes. So I've noticed that this impulse off the low as of right now is fairly similar, and price is acting and behaving fairly similar to when it, to what it did here. This is clearly a 1, 2, and then you might have a 3, 4, and then an extended fifth. You could say you had a 3, a small 4, and then your fifth. How you count that is kind of irrelevant. But right now, the way this structure has developed for me, I believe if this structure plays out, we're in a 1, 2, 3, 4, and then we'll have our extended fifth wave from there, which would put in our 1 wave, and then a 2, and then 3, 4, 5. This 2 wave obviously doesn't have to be as extreme as the Rona dump, but I'm sure there's several potential scenarios brewing to cause what everybody calls the black swan event, which really, is not a black swan event. It's just the way market structures move, and there just happens to be some news at that point in time, which everybody then thinks that that's why it dumped. It can potentially cause extremes, but it does not cause the dump. But that's a discussion for a later date. So anyways, there's several different narratives out there that could cause this, whether it be, the US dollar losing its reserve currency, whether it be, another war, but whatever, with the macroeconomic situation that is brewing, inflation, whatever, that could cause that serious dump. So that I just wanted to point out. Let's look at another situation. So this is kind of getting a little more into the details from an Elliott wave standpoint as how this wave can possibly be counted and can possibly unfold. So this would be really my primary right now, is that this is a 1, 2, this is a 3, this was a B, C with an expanded flat for a 4, and then we have some sort of an impulsive structure up here. And what this impulsive structure is yet to be seen, and can be looked at as a few different things if this is indeed a fifth wave or possibly the start of a 3 wave. So let's go back to that here in just a second. Let me show you my other potential counts. Is that this is a 1, this is a 2, this is a 3, this is a 4, this is a 5. I got to turn my color on this guy, and we'll turn this one into a micro or a sub micro. That way it's just, actually we'll make it blue or green. I hope you guys, we'll make it yellow. I hope you guys can see that through the video. So this could be a 1, 2, 3, 4, 5, being an entirely full complete count up for a fifth wave. And then this would be a larger degree 1 wave, and then 2, and then we are up into our 3 wave, and this is the first impulse of some sort starting our 3, 4, 5. So again, let's go over that real quick. 2 different scenarios. The white, which is 1, 2, 3, 4, and this is either the end of our fifth wave, or this is starting an extension of our fifth wave, or 2, this is a 1, 2, 3, 4, 5, complete 1 wave. We have a 2 wave down, this being an ABC, and now we are potentially starting our larger degree 3 wave structure. So with that being said, I'm going to dive into the details a little bit. And this I might lose you guys. This might start to get confusing. But this structure, let's just zoom out for just a second. So this whole structure here which happens to be this structure that I was just talking about here. So that this entire structure is this structure just zoomed in. So what this thing could be is a couple different things. Like I said, it could be a complete impulsive structure up if this does end up correcting and impulsing downwards, and we break down and we break below, you know, these certain points that I will go over here. Let me declutter this, and then I'll just add these levels in as we go. So this could be a completed fifth wave structure, and then we're gonna, you know, correct down. This could be a 1, 2, 3, 4, 5, putting in a 1, a 2, and then this is a 1, 2, 3, 4, 5, putting in a 1 and a 2, and then this is a 1, 2, 3, 4, 5, putting in a 1 and a 2. So this would be a very uber bullish scenario that would be setting up for either the larger degree impulsive 3-wave or an extended 5th wave, depending on what count it ends up being in. I don't know, but 1, 2, 1, 2. This is nested 1-2s, which is uber bullish. The look of this is a little funky. It doesn't really look right if you want to say, say it that way. A lot of Elliott Wave Elliottians would say that this doesn't look right, but it doesn't really matter whether it looks right or not until it invalidates itself. And it's definitely a potential scenario that we need to look at and watch. So here's how this thing breaks down. And the reason why this is so important to understand this right now, guys, is because if you guys are in positions, whether it be long or short or altcoins, whatever, this can give you guys an idea of what you can expect at certain levels if certain levels break. So for me personally, I am spot long on a lot of altcoins. I'm about 65-70% allocated in my position for my altcoins. So what I'm looking for is an invalidation. That way I can look for this possible structure down, so I can say, okay, this thing is impulsive off of the high, which means that the trend is changing potentially. So what I would be looking for is a 1, 2, 3, 4, 5 down, and then an ABC up in order for me to go short, hedge short. So now I would be hedging my spot altcoin positions in case this thing does go against those, then I'm at least hedged. That way I'm making money on the way down. And then I can, if this thing completely goes to shit itself, I can at least eliminate those positions without losing, as much money as I would have if I wouldn't have hedged. So the reason to understand this stuff is for those types of reasons. It's risk management. It's understanding the possible scenarios and what you need to do and how you need to position yourself in order to avoid, obviously, max pain. So this range up here, which is our third series of nested 1-2s, which this is clearly an impulsive structure, 1, 2, 3, 4, 5. And then you've got a possible ABC down. And then this structure is somewhat questionable to be a 1-2. This could be a 1, 2, 3, 4, 5. Or this could be a 1, this could be an A, B, C of a crazy, weird, expanded flat. It could do a couple different things, but regardless of all of that, what is important to look at here is this key structure. So right now, I've got two different scenarios on this chart, right? We've got the 1 wave up, the impulsive 1 wave up, and this would be a 2 wave down. And then from here, we should move impulsively in a 5 wave structure if indeed we have bottomed and we're ready to move up in that, one of those counts that we discussed earlier. So in order for this count to be validated, we would need to break above 28,449. So this thing really has to break above 28,449 in order to say, okay, we are continuing our move upwards, and we are not possibly having a trend change with a 5-wave structure down, because we've made a 5-wave structure off the low, and we've invalidated this yellow 5-wave structure by breaking above and by having your potential 4-wave overlap into your 1-wave. So if that happens, then I'm comfy. I don't go short. I don't, hedge short my position, because I'm comfortable in my long still until I see another scenario brewing like this. So let's say that does not happen. And in order to, for me to start looking for my hedge short, what I need to have happen is I need to break back below this without breaking above 28,449. So from here, if we end up dropping down and making a 5-wave structure down, that would invalidate this ABC, and then that would mean this entire structure here, this 1, 2, 3, 4, 5, is impulsive, and it's a 5-wave structure, indicating to me that there would be some sort of a trend change taking place. I'm not going to say it's a macro trend change, because I think it's just a correction, and that would be all it was. So then at that point, what I would be looking for, let's just say it bottomed right here, I would be looking for a 618 to 786 retracement for basically what could be either a larger degree 2-wave, because this puts in a 1. So you'd have your 1, 2, 3, 4, 5. You'd put in your 1, and your 2-wave should move like that. I'm not going to figure that out yet. And that should move in a 3-wave structure, being an ABC, which would put in your 2-wave. So in this zone is where I would look to enter shorts, hedge shorts. And I would be, at that point, trying to figure out what my targets would be for my hedge short. So let's say this structure plays out. We could possibly get an A wave or an impulsive structure all the way down, to 26,000. Or this also could just be an A, B, C at your 1.0 fib extension level, which would be just a typical ABC zigzag, which would then potentially still be a 2-wave of our larger degree impulse. This video is getting extremely long, guys, so I hope y'all pay attention. This is a lot of alpha in it. Okay, so this zone here becomes your pivot point. So this means that this is the area right here, which happens to correlate with the bottom, here. So more than likely, we're going to get some sort of action. It's not going to likely slice straight through it. But if you become impulsive right here off of this low, then you can maybe kind of start to assume that the bottom is in. And if I hedge short, I would have my stop loss somewhere around here. That way, if I hit it, I'm out in profit. And then, I can move on and reevaluate from there. Because this could be a C wave, or it could pierce straight through here. It could be corrective off of this low and then continue to the 3-wave and then to the 5-wave. So then at that point, that's an entire structure down, which would likely be an A wave if that happens. And then you could expect from there, say that gets down to 26,175. You could expect from there a 618 retracement again for a B, of more than likely an AB. And then you would have a C wave down. And to get that projected target, you take your fib extension tool from your A to your B. And then that zone that I would look for this to bottom would be right here. So that would be at this point, this zone, this price period from 24,664 up to around 25,300. If we end up invalidating all of this stuff here and breaking below, that area there would be my first zone that I would be paying attention to for a potential reversal. And if we throw our fibs on it, let's see, that actually still puts us in the possibility of this being, so if we throw our fibs, that's a 786 retracement from this bottom here, which could be a 1-2, and then this larger one, this yellow one, and then we reset our 2 like that, and then we finally get our larger degree 3-wave up. That would be my primary scenario if we got this exact count. So we're going to leave it there, guys. I know I've been over a lot. I know this video got quite a bit longer than I had anticipated. That last, however long it's been, 5-7 minutes. If you guys rewatch that over and over again, that's got a lot of alpha in it. I hope you guys understand it and take it and just, you know, try to digest it and learn from it as much as possible. Because that's how that's how my analysis works, and that's how I analyze structures and my risk management strategies and all that fun stuff. So see y'all.